What's up, Silver Squad? Welcome back to the Silver Guy. Be sure to leave a comment on whether you're new to stacking metals or you've been stacking for quite some time. I'd really love to hear everyone's journey in the section down below. I'm going to cut straight to it today because there is a lot happening in the silver market right now, and if you're not paying attention, you're going to miss one of the most important setups I've seen in years. As I'm recording this, Western spot silver is sitting at 86.50 an ounce. Now here's where it gets really interesting. Shanghai spot silver on the SHFE is trading at 98.00. That is an 11.50 premium that China is paying over the Western price. Let that sink in. The East is bidding 98 for silver while the West is still pricing it at 86.50. That spread is not noise. That is a signal. When the world's largest physical consumer of silver is willing to pay nearly 13% more than the Western paper price, it tells you everything you need to know about where real demand is coming from and where this price is ultimately heading. They've been hammering this price over and over again on the Western exchanges, trying to push it down. And you know what silver is doing? It is absorbing every single punch. And meanwhile, Shanghai doesn't care. Shanghai is pricing silver at 98. That, my friends, is what a strong market with real underlying bids looks like. The paper guys can suppress all they want, but when physical demand is this strong, the market wins every single time. So today we're going deep. We're going to cover the price action, the technical setup, the options market screaming at us, what's happening in the COMEX warehouses, a bombshell short position on the Shanghai Futures Exchange, a crisis unfolding in Mexico, capital rotation out of paper and into hard assets, what China is doing with gold, and yes, we'll get into some caution flags too, because high volatility cuts both ways. Now let's look at where we are technically on the Western COMEX price. At 86.50, we're sitting just below a resistance zone between 87.20 and 89. For those of you watching the charts, what we need to see for a confirmed breakout and continuation higher is a decisive candle body close above 89. Not a wick, not a touch, an actual candle body close. If we get that, the next targets are 90 and then 92. Now keep in mind, Shanghai is already trading at 98, so the Western paper market has a lot of catching up to do. That gap doesn't persist forever. Either Shanghai comes down or COMEX has to chase it higher. Given where the physical demand is sitting, I know which direction I'm betting on. Watch that 89 level like a hawk. A close above it could be the rocket ignition point. Let's talk about what's happening with open interest and physical deliveries, because this is where paper meets physical, and right now, physical is winning. We're sitting at 44,500 open contracts in March silver heading into first notice day. Do the math. Each contract represents 5,000 ounces of silver. That's 222.5 million ounces of paper silver. 222.5 million ounces. And what happened in February deliveries? 23.5 million ounces were actually delivered. That is not a paper game. That is real metal changing hands. Real ounces. Real delivery. The physical pipeline is running hot. Every time an ounce of real silver leaves a COMEX warehouse, that's less inventory standing between us and a supply squeeze. And speaking of warehouses, on Friday alone, one single day, 2.25 million ounces were drained out of COMEX silver warehouses. That brings total eligible and registered COMEX silver inventory down to approximately 364 million ounces. That sounds like a big number until you compare it to the 222 million ounces of paper contracts outstanding. The cushion is thinner than most people realize, and this isn't a one-day blip. This is a pattern. Inventory has been consistently draining. Ounces are leaving and they're not coming back fast enough. Part of the reason? Let's talk about Mexico. Alright, this next one is something I genuinely haven't seen before, and it's a situation that could get very interesting very quickly. On the Shanghai Futures Exchange, the SHFE, there is reportedly a Chinese billionaire holding a naked short position in silver worth approximately 450 metric tons. 450 metric tons. Here's the problem. Total SHFE silver warehouse inventory is only around 350 metric tons. You heard that right? The short position exceeds the total exchange inventory. This is a textbook naked short. And now consider this. Shanghai silver is already trading at 98 an ounce. This short seller is already deeply underwater. If silver holds or goes higher, this position becomes a financial catastrophe. The SHFE is reopening tonight. Every silver watcher should have one eye glued to Shanghai. This is the kind of position that can blow up spectacularly or force a disorderly unwind that sends shockwaves through the entire silver market. And if that unwind happens with Shanghai already at 98, the Western price at 86.50 will not be able to ignore it for long. Now let's talk about the supply side, specifically Mexico. And this is serious. Mexico is the world's largest silver-producing nation. According to the U.S. Geological Survey, Mexico accounts for approximately 44% of all U.S. silver imports over the 2020-2023 period. Some more recent estimates put that figure even higher, closer to 50% or more when you account for recent shipments. Over 65 million ounces of silver came from Mexico to the United States in 2024 alone. Now imagine what happens when that supply chain gets disrupted. Right now, there is a deepening security crisis in Mexico. Cartel violence has escalated dramatically following the killing of a major cartel leader. Road blockades are shutting down transport corridors. Mining companies are paying protection money. Workers, geologists, engineers are being kidnapped. 5 workers from Vizsla Silver's Sinaloa operations were killed. 5 more remain missing. Talent is fleeing. It is becoming nearly impossible to obtain transportation insurance for silver shipments. The COMEX warehouses depend on Mexican silver flowing north, and that flow is being choked. The U.S. government elevated silver to critical mineral status precisely because of this vulnerability. Former President Trump publicly floated the idea of U.S. military intervention. That's not normal. That tells you the strategic stakes here are enormous. We don't know yet how long this disruption lasts, but the structural impact on COMEX inventory replenishment is already showing up in the drain numbers we discussed. All right, let's pull way back and look at what's driving all of this from a macro perspective, because this isn't just a silver story. This is a global capital story. We are watching a once-in-a-generation rotation out of paper assets and into hard assets. Equities are overvalued by historical measures. Crypto has had its run but is pulling back, and both institutional and retail investors are asking themselves, what do I own that has no counterparty risk? Gold, silver, physical, real things. There's another force at play here too, and it's one that doesn't get talked about enough. Artificial intelligence and the displacement of white-collar workers. We're talking about lawyers, accountants, analysts, programmers. Entire categories of professional work are being automated. If that plays out at scale over the next 3 to 5 years, you get wage contraction in the top income brackets, you get reduced consumer spending capacity, and you get an economic environment where people instinctively reach for assets that can't be inflated, diluted, or defaulted on. Gold and silver have no counterparty risk. You can't print more of them. And when the financial system looks unstable, which frankly it does right now, they become the ultimate safe harbor. The U.S. budget deficit is running at approximately 7% of GDP. Most major Western economies are in the same boat. Central banks are cutting rates. In that environment, the combination of massive fiscal deficits plus falling real interest rates is a rocket fuel environment for precious metals. CME Group's own economists highlighted this dynamic at the start of 2025, and it has played out exactly as the fundamentals suggested. Now, let's talk about China, because what's happening there in the gold market is extraordinary, and it has direct implications for silver. According to the World Gold Council, Chinese gold ETF holdings more than doubled in 2025. That's a 116% increase in tonnage to a record 248 tons by year-end. In January 2026 alone, Chinese investors poured another $6.2 billion into gold ETFs, the second strongest monthly inflow ever recorded. The People's Bank of China has been buying gold for 15 consecutive months. Chinese citizens have limited options in domestic markets. Housing is in crisis, equity markets are volatile, and gold has become the go-to savings vehicle. As CNBC reported in February 2026, gold-backed ETF holdings in China have more than doubled since the start of 2025. When the world's second-largest economy is rotating its savings into hard assets at a historic pace, that is a signal you take seriously. And when gold leads, silver historically follows with higher percentage gains, which brings us to the gold-to-silver ratio. All right, let's talk about the gold-to-silver ratio, or the GSR, because this is one of my favorite indicators for timing silver exposure. At the peak of the silver suppression, the GSR was sitting up around 100. Gold was 100 times the price of silver. That was insane. Historically, the ratio has averaged somewhere around 50 to 60 over the long term, and it has touched as low as 14 to 1 during silver's strongest runs. During the recent spike, we saw the ratio compress all the way down to around 44 to 1. That was silver screaming upward relative to gold. The ratio has since stabilized around 60 to 1. And here's what's significant. Silver is no longer lagging gold the way it used to. Silver is behaving more aggressively. It's asserting itself. A ratio below 60 means silver is outperforming gold on a relative basis. If we get back toward the low 50s or below, And given the fundamentals, that's entirely plausible. The gains in silver on a percentage basis will be dramatic. Now I want to be straight with you, because the silver guy doesn't just pump the bull case, I give you the full picture. And there are legitimate risks here. First, high volatility cuts both ways. The same implied volatility, reading above 100 that signals potential explosive upside, also signals potential violent pullbacks. A 10% or 15% correction in a market this volatile is not only possible, it's likely at some point. Do not use money you can't afford to lose. Do not get margin called out of a good position because you got over-leveraged. Second, the Shanghai reopening tonight is a wild card. The SHFE naked short situation is a powder keg. But the Chinese government and exchange regulators have tools to intervene, defer, and manage the situation. A cautious reopening with circuit breakers could contain the immediate pressure. We don't know yet. Third, Mexico. The disruption is real and serious, but we don't yet have full visibility on how long it lasts, how severe the impact is on COMEX replenishment, or whether the US or Mexican government steps in decisively to restore supply chains. The fundamentals are extraordinarily strong. But in the short term, this market is a two-way street. Manage your risk. Hold physical if you can. Stay informed. All right, Silver Squad. That's the full rundown. Let me summarize it quick. Western silver is at 86.50. Shanghai is already pricing it at 98.00. That 11.50 premium is the physical market screaming the truth. Gold is up 4%, silver is up 11% in 2 days. The COMEX implied volatility index has broken above 100. Open interest is massive ahead of first notice day. Physical deliveries are surging. A naked short on the SHFE larger than total exchange inventory is a time bomb. COMEX warehouses are draining. Mexico, 44% of US silver imports, is in crisis. The structural deficit is in its 5th consecutive year. China is pouring money into gold at a record pace. Capital is rotating hard into hard assets. And the gold to silver ratio is telling us silver is finally waking up. This is not financial advice. Do your own research, talk to a professional, and never invest more than you can afford to lose. But I genuinely believe the fundamentals for silver right now are as strong as I have ever seen them. If you found this valuable, smash that like button, subscribe if you're new, and drop your questions in the comments below. I read every single one. I'm the Silver Guy. Stay stacked, stay smart. I'll see you in the next one.